What's up, YouTube? Welcome to another exciting personal finance video where I'm talking gold, silver, stocks, investing, personal finance, all that good stuff. Guys, if you haven't done so already, please subscribe to my channel, like this video, and go on over to my website, My Road to Wealth and Freedom. I'm always posting new content, and I look forward to seeing all your comments and advancing discussions on gold and silver and investing, all that good stuff, guys. Next, my disclaimer. I'm not a financial advisor, so please do your own research before buying anything like gold or silver or buying stocks, investing, whatever. Do your own research. Consult with a financial advisor. This channel's just for entertainment only. Okay, guys. So here we are. It is Sunday, October the 11th, 2020. Wow. What a week, especially with gold and silver in the markets. Of course, the big thing coming out Monday is President Trump's health, um, how that's all going, and then of course there was the idea about the stimulus, right? First it was, yeah, we're getting the stimulus, and then Trump tweeted, I think Tuesday, I can't remember now. Every day in Trump world is a crazy day. But whatever. Late one day, he tweeted something calling off stimulus talks. Of course, the market sold off. Gold and silver tanked. I actually was able to buy some shares of a gold miner on that dip, which I'm happy that I did. Again, at this stage, I think we need to be looking out for opportunities. If I had cash available or whatever, and if I hadn't already bought a bunch of 10-ounce bars and another ounce, 1 ounce gold maple, I would have probably picked some more up on that dip. It was down to like 1880 or something like that. Gold was, silver was down $22, something like that. I think, like, particularly when the price of gold drops, you want to load up on it as much as possible, right? It's super expensive. Not everyone can afford to, obviously. So, but anyways, I took advantage of that sell-off because a couple things. Well, I guess I'll go into how the rest of the week played out first. So then the next day it became, hey, maybe we'll do partial stimulus, send out $1,200 checks. Maybe we'll get some relief for the airline industry. Of course, Democrats in the House were having none of that. They're saying, no, we want a comprehensive bill. 2.2 trillion is their number. And then on Friday or Thursday, yeah, I think Friday. So the market started rallying on all this talk about we're getting a stimulus package. This is just kind of a back and forth thing, and it'll all be okay. We're going to get the stimulus that's been expected, that this market is relying on. Without this stimulus, this market is going back down. The more money they need to keep printing money to keep propping this up. That's just the way it is. We are not recovering the way people thought. This is no V-shaped recovery. Now they're trying to talk a K-shaped recovery. We might be in for this W-shaped recovery, or we just might be in for a prolonged period of decline, like we saw during the Great Depression, like the 1930s. But you can bet before we reach any of that, the government will do and not just the U.S. government. This goes for the European Union, Bank of England, Bank of Canada, Bank of Japan, Australia. They will do whatever they can to prevent that, which means they are going to print an unbelievable amount of money, issue record numbers of treasuries and government bonds and stuff. Like it's just crazy. Yeah, so that's kind of the backdrop. So we're in this stimulus on, stimulus off sort of moment right now. The president came back. I think the White House came back with 1.8 trillion that they want to spend. I just saw yesterday the Democrats rejected that idea, as well as the Senate Republicans. So basically it's this. We ain't gonna see stimulus before the election. Plain and simple. No stimulus until after the election. Whoever wins that election, even if it's a drawn out process or whatever, contested election, stimulus is coming. Trump's going to do stimulus. Biden's going to do stimulus. The bigger picture, and this is why it's important to be a long-term sort of investor, and to think long-term, is that stimulus is coming. It has to. At some point, stimulus is coming. Maybe sooner, maybe later, but stimulus is coming, and it's not just coming in the US, it is coming globally, worldwide. Everybody's doing it. So that's why so many of these market commentators, these gold bugs and gold experts, people who are really following the gold and silver markets, they're saying the wind is at the back of gold and silver. They will rise. Particularly, gold's going to soar. Silver usually plays catch up. So, that's what you can look forward to. I don't know when it's going to happen, but I think the big difference this time around, gold peaked in 2011 and then sold off, went into a horrible bear market for a while. It kind of just got back to new all-time highs this year. But I think the kind of cat's out of the bag now. I think more and more people are going to realize that it's going to be nearly impossible to unwind these balance sheets, central bank balance sheets. The amount of government debt is just astronomical. The U.S. debt clock passed 27 trillion the other day. That's just on book, on sheet liabilities. Never mind, as much as 125 trillion of off balance liabilities like pensions and Social Security and Medicare, Medicaid, that type of stuff. So that's kind of and it's not just the U.S. that's in this. We got Canada and Australia. All these countries are all in the same state. But Japan and they're all in the same boat. So basically, I don't think that we're going to see a huge sell-off in gold. I could be wrong. I'm not an expert, guys, but I think what happened back in 2011 was that people honestly believed that the economic recovery was taking hold. It wasn't the end of the world. The dollar held. The Fed would be able to unwind its balance sheet, and everything would go just perfect again. We'd just go back to normal. Well, that never happened, and this time around, I don't think a single person believes that it will ever happen, that it can happen. How's it going to happen? They can't raise interest rates, and they know it. Without, if they do raise interest rates, now that's the other thing too. People are like, oh, they'll never raise interest rates. Well, they might raise interest rates to fight massive inflation. If inflation gets crazily out of hand, if it's like that 1970s, like stagflation, if we get up there, at a certain point, they might have to man up, crush inflation by raising interest rates. And that is going to kill everybody who has a ton of debt. So if you got a big whopping mortgage, start paying that down now if you weren't able to lock in at a cheap rate. Debt will be your enemy in that scenario. At that point, that is when you'd want to sell your gold and silver and buy safe, secure treasuries, or at least a portion of it. Because there is an end game. That is the play to do, right? When your assets rise in value, you want to try to sell some of that, realize profits, and invest in safer things, right? So, always keep your allocation. I plan to always hold a certain amount of gold and silver. I'm not kind of playing the market in that sense, but of course, if it's just the same with stocks, just the same like with cash or bond. Like if it ever, say you want to hold, 5% gold, and all of a sudden, after all this craziness, your gold weighting is 25%. You're going to want to sell some of that down. Maybe you don't want to sell it all. Maybe you don't even want to go back to the 5% weighting, but sell 10 or 15% and buy something, if you can get a treasury that's yielding 10, 18%, whatever it was in 1980. That's kind of the way to go, right? Of course, stocks will be in the toilet at that point. So then maybe you might want to buy stocks because they'll be really, really cheap, really, really low. But again, it's all risk reward. It's all, balance, right? I don't think I wouldn't recommend anybody investing in any one thing exclusively. You want to kind of keep your options open, right? Because like gold just came off almost a 10-year bear market. You know, you'd be buying for the past 10 years just to sort of, if you bought at the peak in 2011, you would have just broke even like 2 months ago, 3 months ago, something like that, right? Like how would that? And same thing, 1980 gold topped out at 800 an ounce. In the year 2000, it was 250 an ounce. It only reached $800 an ounce in like 2007, 8. Okay? So who wants to wait 28 years? That's an entire working career. That's your entire adult working life saving for retirement. So you don't want to have your money into any one thing. Stocks included, bonds included, like diversify, put your money in different places. Don't have a whole lot of debt. I really think that's kind of going to be the way forward. I think what happened this year should be a wake up call. I don't know if people are going to wake up and realize this because, of course, the government came along and just basically printed money and bailed everybody out. So I'm not really sure the lessons learned were really there. Or if the expectation is now just there that no matter what happens, the government will bail you out. But we know that can't go on forever. That is something that is unsustainable. Sooner or later, you got to pay the piper, right? And we all know that. But yeah, this just goes to show the importance of trying to save a little bit for a rainy day fund, maybe forego some of unnecessary spending. You know, be smart with your money. And I'm not saying that people don't have, that everybody doesn't get a fair shake and stuff like that. But what I am saying is that don't make excuses, right? So many people, oh, I could never do this, but they got a camper or they got a cottage or they have nice cars and the latest iPhone or like, I've heard too much of that. I've seen people make really good money and they're always broke. They can't. Oh, I could never afford that. I could never. Sure, you can. What are you doing with your money that the guy who's saving and investing isn't? Right? Drive your car for 10 years or longer if you can. Try to fix something versus replacing it. Like there's so many different ways that we can save money that we can have that money either in an emergency fund or to invest or whatever. So I'm not interested in hearing it anymore. I've just heard it like so many times, like, oh, there's no good paying jobs. Sure there is. What have you done to get a good paying job? It's a couple $100 to take a computer course, go take a class, learn the code, do whatever. Google. I was on the Google site the other day and I saw like they give free courses on internet marketing. What are all these jobs? You go on like LinkedIn or Indeed or whatever, and what do you see? You see like they want computer programmers or social media marketing and stuff like that. Like these are all job positions, like the social media stuff. I'm just like astonished. You could basically get a high schooler to go in as a social media marketing expert or something like that. It's just think about how much these kids are on Instagram, TikTok, and all these things. Anyways, my point is that don't make excuses. Like there's just no excuse for that. Anybody making money has the ability to save a little bit of something, and if you're not doing that, rather than blaming other people, the system, or whatever, you need to kind of take a hard look at your own life, what you can do. What can you do to make your life better? Blaming other people, it's not going to get you ahead. It might make you feel good, might give you sort of a rationale why you're in whatever situation you're in, but you need to wake up. You need to, buckle down and figure out what you need to do. Get a gig, start a side job, go do a gig on Fiverr, go learn something, develop some new skill. Each and every one of us has that potential. But anyways, I'm not going to go spiel. This is not a motivational talk. Last thing I want to talk to you is, I showcased this coin. This is a 1914 $5 gold coin, Canadian gold coin. One of the few Canadian gold coins. There you go, King George V. And I recently saw this at auction. So There, get a good picture of it for you guys. I just came across an auction. This exact coin. Okay, this is like a hand selected one. I bought 3 of these in the year 2012. The end of 2012, the Royal Canadian Mint or Bank of Canada found out they had a hoard, or they had bags of these gold coins. They were all removed from circulation because of World War One. Okay. They came in $5, $10 denominations, and the years went from 1912 to 1914. So there's 6 coins in total: a $5 coin, like I'm holding here, and a $10 coin, which I never did buy, just because the numismatic value really wasn't there. The $5 is a quarter ounce of gold. It's 90% gold. The $10 about a half ounce, again 90% gold. But 1914 was a really rare date. There was only a couple thousand of these coins made. And if you can get them in really great condition, even the Bank of Canada hoard that they came out with, they had very, very, very few of the 1914 $5 gold coins. I picked up 3 of these bad boys and held on. I never did sell. They were selling on eBay for like, okay, so for the hand selected guys, it was about $500. $500 per coin, $1,500 total. So at that time, I forget, it was 2012, end of 2012, early 2013. I forget where gold was trading, but anyways, today a quarter ounce of gold, you're probably looking at about almost 500 US dollars or something like that. Canadian, that'd be about $725, let's say. So just on the gold content alone, I'm ahead. But I recently came across an auction where I saw these. I bought these because I knew they would be in much better condition, probably close to uncirculated, if not, MS63 or something like that. So I picked these up, and I knew they were worth a lot more than the $500 that I paid for them. And anyway, I recently saw one of these at an auction, and I think the opening bid, I forget what the opening bid was, but auctions, they have like a range, where they're saying like, this should fetch, say, between $100 and $1,000 or something like that, whatever it is. Well, for this coin, the range was between, I think, $1,200 and $2,500. So I was just like, just think about that. I spent $1,500 on these things, and at the low end, I could get $3,600, and at the high end, it'd be $7,500. That is just crazy. I knew at the time, I was like, this is just an incredible deal. I wanted to buy all 3 of them. Because that was the limit. They placed limits. You could only buy 3 at a time. I should have bought more. Of course, you're always like, should have bought more. On all the winners, we're always thinking we should have bought more. But anyway, I don't want to go on too long. That's just kind of a neat little thing I came across this week. I want to share with you guys. Hope y'all are doing well. Gold is 1930. Silver just over $25. It's probably going to go down. I see the deal. The Democrats aren't going to do a deal Monday. It's probably going to be, it's probably going to get hammered. But I'm thinking long term here, and I think everybody investing should always think long term, and you'll come out ahead. If you don't have any gold or silver, maybe you might want to take any upcoming volatility to be a buying opportunity. I'm not saying to put everything into this, but you the name of the game is try to buy low, keep your cost base low, and maybe the gold stocks will do something too. But anyways, guys, I'm not going to bore you anymore. Please subscribe to this channel, like this video, check out my website, My Road to Wealth and Freedom. Have a good one, guys.